is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Angela Lee, founder of 37 Angels. 37 Angels is a community of 100 angel investors with a mission to activate investors through local and global investor trainings. Their main goal is to increase diversity in angel investing. Many of the members are former entrepreneurs who understand the highs and lows of business building. As such, they are committed to transparency and communication and providing advice grounded in empathy. We primarily invest in early-stage companies and are sector and geography agnostic. Angela, thank you for joining us.
Oh, thank you so much for having me.
Great. Where are you calling from today?
I am in New York City, which is where 37 Angels is based and also where I hang out most of the time because I'm also a professor at Columbia Business School.
Great. Well, tell us more about your background. What did you do before this?
I very much come to the world of investing from being a founder. So I went to UC Berkeley during the first dot-com boom, and so very much started a company when, money was falling from the sky in the late 90s. Have been an entrepreneur several more times. On the more corporate side, I was a product manager for a number of years. I worked at McKinsey for a number of years. And these days, I am mostly a professor. And then on the side, I run 37 Angels.
Great. Well, tell us more about 37 Angels. Tell us about that group, how it works, and how you do deal flow and how people make decisions.
So there are really two halves of what we do. The first is education, not surprisingly, something I'm very passionate about personally and professionally. We teach people how to do startup investing. So whether that is as an angel or as an aspiring VC, some people have, folks take our boot camp and they learn how to use source deal flow, how to use diligence deals, what matters on a term sheet, how on earth do you value these startups. So that's on the education side. And then on the investing side, we are looking at about 2,000 companies a year to invest in 10 each year. We've been doing this for a while, so we've invested in over 110 companies at this point.
Great. Well, pandemic changed things quite a bit for angel groups, but how is the group growing post-pandemic?
So what I would say is that in some ways, very little has changed, right? So startup investing, as you know, is a very long-term game. So we try to always teach our investors to not be too reactionary to what's happening, this quarter in the public markets. So I think a lot of it is just reducing any anxiety people are feeling because, public and private market investing is related. And then I would say one thing that everybody is feeling in this ecosystem is just liquidity, right? So I think it's not something I talked as much about maybe 5 years ago, but now everyone is really focused on when is this company going to exit? Can we nudge founders to exit? Because folks want to see those returns.
So what do you think is the main challenge of running an angel network post-pandemic? What do you see out there these days?
I think that one thing is just cat herding, right? The thing about being an angel investor is, we have 100 investors in our network, and so there's a lot of cat herding. Also, the world is more distributed. A fun fact is pre-COVID, the average distance between a founder and their lead investor was about 100 miles. Post-pandemic, we're at 600 miles. So it is a much more distributed world, and that means that we are working with founders who are managing distributed teams, and we're also just physically a little bit further apart, and that makes account herding just that much more difficult.
Okay. And what do you see as a potential reward in angel investing today? For example, how much are companies selling for in your group?
So we try to only invest in companies when we see a 10x return, meaning if I put in $100,000, I'm going to be able to take out $1 million, and that has not changed. We are lucky enough that we have done that quite a few times in our portfolio. 3 of our portfolio companies have IPO'd, and about 18 of them have been acquired. So we are very lucky to be in that kind of top decile of returns. And the goal is to turn your money into 3x over 10 years or have a 20% internal rate of return. And thankfully, we are hitting those numbers. But beyond that, I always tell people there are so many reasons to do this above and beyond the financial rewards. It is such an amazing network to be a part of. I learn every single day. And it's really exciting to be a part of the change that we are all going to be experiencing as consumers, business people through the rest of our lives.
Well, certainly your returns are different from other angel groups. Not everybody's in the top 10 decile, but what are the other differences between your group and just general angel networks out there?
I think that three things we really hammer home are efficiency, transparency, and empathy. So from an efficiency perspective, we guarantee from pitch to funding decision is 4 weeks. And we might be one of the few angel networks that guarantees a timeline. And we very much try to work at the pace of VCs. On the transparency side, we try not to tell founders maybe too often. If it's a no, it's a no. I think the worst thing an investor can tell a founder is maybe and waste a lot of their time. And then on the empathy side, a bunch of the investors in our network, myself included, are former founders. So we really know what it's like to be in their shoes. And, yes, our financial performance has been very good, but the statistic I'm the most proud of is that we have a bunch of founder testimonials on our website from founders saying, hey, this is a great network to work with. They're efficient, they're helpful, they add value. 75% of those testimonials were from founders who we did not give money to. And I think that is really important because we say no, 99% of the time, and our reputation is made up of the people we say no to. And if you can do that in a thoughtful and transparent and helpful way, it is good for the founders, but it's also good for us.
Great. What do you see about diversity in angel groups, in particular your own?
So the reason why we're called 37 Angels is because when we started, only 13% of angels were women, and we wanted to close that gap from 13% to 50%. Over a decade later, we're at high teens, 20% of angels are women. So it's getting better, but the ecosystem is incredibly undiverse. I'm sure a lot of you've heard only, 2% of all venture capital and angel funding goes to women founders. So we are really focused on closing the diversity gap on the side of the investor. So we are neutral in terms of what we invest in, but our investors are primarily female.
Great. Well, let's talk about where angel groups are going in the future. There's so many new things out there. How do you think the angel group model will evolve over time?
So I think we are seeing a lot of different ways to invest in startups. So one is the way that people are organized, right? So whether it is via a syndicate, whether they're pooling money, whether they're not, how people are making decisions to invest. And then the other thing is around crowdfunding, right? There are, as opposed to having to write a $25,000 check, there are many, many websites out there that now allow you to invest in, one company for $1,000. So that's great. And then I think finally, another difference with angel investing is that people are expecting the angels to help and to support their portfolio companies post-investment.
So I met an angel group leader the other day here in Austin, and they likened the angel group as a marketplace, matching startups and investors. So they look like, well, we're just a marketplace. What's your reaction to that?
I think it's not an inaccurate way. We think of ourselves as like a curator of deals for the angels in our network. And so, we look at a couple thousand a year, but we only introduce the best 50 to our angels. So that's really what they're getting access to is deal curation. And I also think that, again, as the world gets a little bit more distributed and maybe a little bit more lonely, I'm surprised at how much people just want to hang out together, right? Which is, people are traveling together, they're starting businesses together, they're helping each other find jobs. The word network is very intentional in the sense that people want that network of like-minded, successful, intellectually curious people to not just invest alongside, but work alongside, network alongside.
Well, I've found that angel investors are looking for validation and not just from the founder with more information. They're looking for more information from those who are not in the startup. And so that's usually other people in the network, especially with those with domain knowledge. How often do you have people lead the deals with domain knowledge versus it's more of a party round? We just all come together and share what we have.
So I would say that in terms of 37 Angels as a network leading deals, we lead maybe 20% of the deals that we invest in, primarily because we're writing maybe a $200,000 check into a $2 million round. So it often doesn't make sense for us to lead. That said, we do it occasionally. Within the network, we absolutely have folks who have raised their hand to say, look, I'm an expert in this space. I can help with diligence. And we also have folks who like to lead the diligence process, and they are really good cat herders. And so those folks have naturally emerged over time.
Right. Well, there's a lot more groups now coming into the same space where angels invest, go to market, I guess is a good way to put it. But now we see crowdfunding, we see micro VCs or syndicate funds and more. Where do you think the angel group should what role should they take in the startup ecosystem going forward?
Yeah, I think it goes back to adding value and then the power of the network, right? So in terms of adding value, I think a mistake I see investors make is they're just like, we'll help you in a very general way. And I think it's important for angel networks to be very specific about how they can help. So one thing is that we have relationships with a lot of journalists, and so we can really help with PR. The second thing is helping people to hire. We have a very well-networked group, and founders often come to us with help hiring. And then finally, fundraising. We have relationships with over 500 investors, and we can help our founders raise their Series A. And so I think being very specific on how you can help is something that is important. And then secondarily, again, the power of the network. It's not just a network to do diligence, it's a network to do other types of things like real estate deals we've seen come through. We just invested in a Broadway play, which is unrelated to our angel investing activities. And I think that is a differentiator of angel networks.
Well, there's the rise of the use of AI in just about everything. How do you see AI coming in and helping the angel group in this case?
I think AI is helpful in terms of doing an initial screen, right? So there are some things that are pretty binary. So for example, a hard and fast rule for us is you need to have 6 months of customer data before it really makes sense for us to start engaging. Now, it doesn't have to be post-revenue, but we do need 6 months of customer data so I know, do people like the product? Are they logging in multiple times a week? Stuff like that. That is something that you don't need a human to figure out. AI can easily take a stab at that. Another simple one would be like geographical headquarters, right? Where are you headquartered? We have an upper bound in terms of valuation of where we like to invest. Like those are very easy things where I can see AI coming in and be like, you don't need to look at 25% of the 2,000 deals you're looking at per year. That would be a huge time saver. We are personally not yet comfortable with using AI to say yes. But I do think for some broad sweeps, we can certainly say these are the areas that we don't want to look at.
I know some VCs are very data driven. They ask for a lot of information and then they do a tremendous amount of data crunching on it as well. Sound like you're taking a lighter version of that and applying it to the angel space.
I think it depends on what you mean by data. So in terms of data from the founder, we very much look for that, mostly around engagement data, growth data, and we look very carefully at their metrics. In terms of paying for benchmarking data, paying for, expert reports, we're doing less of that. That's much more common on the VC side.
Okay. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
I think, you're talking a lot about change in the ecosystem. Another thing is just recognizing that there are so many alternatives to equity investing, right? So when we think about angel investing, venture capital investing, I give a founder money, I now own a percentage of that company. That is being disrupted as well with things like venture debt, revenue-based financing, with Shark Tank is very famous for, instead of saying, I now own a percentage of your company, maybe I own 10% of your revenue in perpetuity or for X number of years. I am very excited about all of these because the equity investing model does not work for every startup. And so I love that there are innovations coming in that way as well.
Have you actually put those term sheets at work in your deals, revenue share of some kind or income share?
Yeah, so I'm on the board of a venture debt fund and I work closely with another revenue-based financer. So we don't do it ourselves, but we'll often see companies where we say, you're not really a fit for equity investing. Let me refer you to folks who do venture debt and revenue-based financing. Absolutely.
Okay. That sounds good. So how best for investors to get back in touch with you?
Yeah, so if you want to learn more about 37 Angels, you can find us at 37angels.com. Our bootcamp is at 37angels.com/bootcamp. And we have a ton of resources on our website, like finding accelerators in your sector and geography, and also a glossary of all of those fun terms that we're always hearing about.
Great. Well, I want to thank you for joining us today. We'll include all those details in our show notes, and we hope to have you back for a follow-up soon.
Thank you so much.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.